we cover companies that in the US are mostly focused on solar development now. They've done wind for many years, but they've shifted their capital plans towards developing solar over the last 3 to 4 years. And as we alluded to, that's a subsector of renewables that is doing relatively better. Actually, a lot of the developers that we cover have recovered, their share prices have recovered significantly this year. And that's led by two things. Number one, even though policy is now worse than under the IRA, the clarity that we have going forward is very important for these developers. It allows them to reset their capital plans for the next 2 to 3 years. And what we've seen there are divergent paths. We've seen most of the companies have scaled back investments in the US, something between 20 and 30%, excluding Ørsted. So still a scale back, but they are still investing. They are still trying to capture some of these tax credits. And just to add a little bit of color on something that Herbert also touched on, we've done some math on what taking away the PTCs means for PPAs. And we expect that if, let's say, you take an average PPA of $50 a megawatt hour now, if that rises by $15 a megawatt hour, a solar project is still meeting the return targets of utilities. And that's not a crazy, so going to 65, that's not crazy in an environment where tech companies are pushing so much to build power projects.